And welcome back to Dan's Trades with one more trade review video on February 2nd, 2024. New month. It's supposed to be winter, but with this year's weather, you could fool me. We're going to do some quick recap on the trades I took. Not going to go into the high time frame, just going to look at the low time frame. Spoiler alert, not a good day. Today is NFP. I didn't trade in front of it. I did want to trade after it since I've seen good setups after the fact. But I will know, or I will state, as I listen to this after the fact, I knew I should not have been trading. Had nothing to do with trading technicals, nothing to do with the charts, but just things outside of trading that were affecting my mental headspace. But discipline lost in my mental battle today, and I traded when I should not have, and I paid the price, not in real funds, but in combine funds. So let's see what happens. So this is a 5-minute chart. I'll drop down into the 15-second chart just so we can easily see, or just so I can easily see where the trades were. It's much easier that way. Let's see. Okay, let's fly back here. Try not to get sick. That's for later. And here was the morning. Okay. So we had a 5-minute fair value gap. Just for sakes, here was the NFP announcement. That was the 8:30 news. Drop like a rock. Welcome to non-farm payroll. Do not trade in front of it. I will throw my trade executions on now so you can see I did not take anything there. All trading started over here, so no trades before NFP. That part of the mental game I won. Next part of the mental game is where I lost. So I had a mind to see some longs, since I do have a bullish bias. We're going to take out some all-time highs probably next week. Once again, we'll see. It is an election year. But here was my plan, was I wanted to get a trade slightly based off this fair value gap, but it was too much risk, so I was only going to risk lower on a 1-minute chart. So I came in, I wanted to looking for a trade here, but I missed the fair value gaps bouncing off at entries here, where I could have taken some partials as I take out, or as the market took out minor liquidity here, and hunting up towards this 0.5 standard deviation, which is for another day. But that was my target. So about 28 points, 22 stop for about a 1.2R trade. Again, human nature came into play. I chased price exactly at the wrong time, and it went against me. So one contract in, comes back down. I said, okay, yeah, now we're finally starting to trace back down. I didn't have the patience to wait. Even though this is a 15-second chart, I didn't have the patience to wait a minute because I just thought I was going to run away and hit the target. So I thought I'd get a tiny scalp, which, as you can see, did not happen. So I ended up adding a second contract. Then I wanted to put one more order on as I was entering in these trades. Again, being the trade of a combine, I can't enter in with bracket orders, so I was setting the stops, setting the targets, going from 1 to 2. Then I set the stop to 2. Then I went to enter a third contract right here on the actually hitting where I should have entered the first time. And I had it on 2. So I bought 2 by mistake again. Immediately covered 1. So I wasn't breaking rules. I didn't want to be above 3 contracts. Either way, it didn't matter. Market went completely against me. I was thinking, and I was used to my older accounts that I got funded on last year, where the 50K combine had a $1,000 daily loss limit. And I assumed in my brain it was going to trigger, and all of a sudden I saw it keep going down, and it didn't automatically exit out. So that's the other part that I knew that I shouldn't be trading. And I said, wow, well, that's weird. So I finally hit my stop, and I sold out here because I had it set below consequent encroachment just to try and do some proper risk management. Well, either way, long story short, not a good trade. So 1, 2, 3 entries, 1, 2, 3 exits. And I was down about $2,000 in the combine. Said, did you learn your lesson yet, Dan? So yeah, most likely, but probably not. So I continued to watch for a little bit, and I said, you know what? I know it's going to this 0.5. I just know it is. but I just have to find a proper entry. So I scaled back to 1 thoughtfully. Oh, no, I didn't. I literally thought I was in 1 contract and I was in 3. So, luckily, it only went slightly against me and didn't hit any of my daily loss limits, even though I was down probably another $500 there. So probably for $2,500 down. For the record, the daily loss limit on a 150K combine with Top Step is $3,000. I did not hit it. It's the only good thing that went in my favor today is I didn't hit a 3,000 DLL right here for daily loss limit. And it actually went in my favor. And I said, get out. I think I got out at consequent encroachment just in case this was, since we closed below, this absolutely could have been considered an inversion fair value gap at this point. Since we closed below, but I'm not going to mark it up changes. So since we closed here, it could have been an inversion. So I did get lucky that we didn't reverse back down right here and continued up higher. So I was thinking just in case I wanted to get out around consequent encroachment, which is about where I took that off. You'll see exactly there. That was my target. So 17,630 long from 17,614. So I recouped half my losses back. And I said, all right, I feel a little bit better. And I did also notice, you'll see up here, this bracket is an indicator that helps me with the macros. 1050 to 1110. So I was trying to trade inside this macro time. The more studying I've done from ICT, the more I see and successful traders trading inside these macros. But it's not always a move the price macro. Sometimes the macros are for consolidation and building up, doing accumulation. So we went a little bit both ways in this macro, and I was trying to scalp out right before the macro ended. And I took one last one, you see here, where I so this was long 3, covered, bought 3 more, because I figured, hey, it worked great that time, why not do it again, Dan? Yeah, bad answer. 17,640, 627, so I gave back some more again. And I thought I was still inside it. Recovered back 631, bought 1 more, finally figured out, hey, let's move it back down to 1 contract and just let it run. I had a feeling it was going to go for all-time highs, or I had an inkling that it may. So I put 1 on there, and I said, no, wait, look at the macro time, and I got back out at 17,640, so add on about 10 more points to recoup these small losses. So there I sat the morning, not happy with myself, saying, what are you doing? I know I did trade in front of NFP, but I chased price one more time because, again, not in the right headspace. Oh, and look. Yeah, we absolutely did hit that 0.5. Had I just left the runner on, we could have made it, but that's neither here nor there. I was out then and I wasn't in another trade, so none of this matters. Price did go to where I was assuming, and then some. Had I been in Henry's, I think I would have been able to hold it. All right, so let's go back to the afternoon now. So I waited till the PM session to say, hey, maybe there's going to be another PM setup. Maybe I can recoup some more of my losses. We'll see. I was feeling a little bit better after those second trades, after the first ones were a huge mistake. So I marked out this fair value gap not to be bullish or biased, just to literally mark it. That's why we see the borders gray. And I might as well just make the inside gray as well for the background. No bias, I was just looking at it, purely to look at it. So we had came down and used this 0.5 standard deviation, now acted as support. So I saw price reversing at it, so I took a long here. One more, 17,682. Then I was going to see how it was going to react to this fair value gap that we had sliced right through. So this is where it formed it, 5 minutes. So there to here was the fair value gap, sliced right through it. I want to see if it was going to slice right back up into the macro time. So I was anticipating it here. Treated it as resistance. So I said, all right, I'm cutting bait, taking what I can there. So it took a few more points, 1.5. And I waited for another reversal, which we did reverse off the standard deviation one more time. Got in one more time. I said, all right, let's let her go. And this time it did not come against me. We did slice back up to consequent encroachment of the fair value gap. Just monitoring the trade. Here's where I was starting to feel good about myself, actually managing a winner, not cutting profits right away. So here was my exit. On retracement, I was stopped out in profit. I was looking for the 1 standard deviation for my target. And inside the macro time again. So I'm happy with my macros. I love trading inside of those. Took one more actually I took one more tiny scalp and just covered right away. So nope, macro time's over, got out. So trades were closed then. Wait for the next macro time. I started marking out a fair value gap. I think this was on a 1 minute chart, give or take. Again, we're down at the 15-second just for my own personal season so I can see it. And my trade idea was, if I can come down and touch this fair value gap, I want to take a long up to all-time highs. That was my trade idea. What I didn't see is there's another tiny fair value gap right here that it did respect and then rallied from there. So this entry and exit, 17.7, 23.25, was when I was attempting to set my bracket orders, actually with the stop loss and take profit, which is a little bit harder to do. I'll just do it this way. So if I were to do it, I'm not going to do one here, but we'll just say create a new order. You just have to select it like this, and then you can place your order. Well, in doing that, I was moving my orders around and I accidentally flipped it into actually buying, and it triggered the selling immediately. So that's when I said enough is enough, and I said, all right, yeah, it's a great trade idea. We're in a macro time. I got a feeling it's going to run up to this 1 standard deviation, potentially hit the buy side liquidity, but I would have been happy with 1 standard deviation. And I just said, nope, it's not coming down to this fair value gap. So my original trade idea was down here. Entry. So I was looking at almost a 3.5 to 1 trade there. Stop down below this previous low. Entry here, target there. 73 points on a 21-point stop. Never got entered, never retraced back down, so I did not chase price on that one. So it only took me an afternoon to figure that out again, so I was getting more in the right headspace, and I did not take the trade. And I will note for my own self, very interesting to see exactly where this trade went to within a tick of that 1 standard deviation, 2 ticks. So note to self, Dan, is set your targets a little bit ahead of it, front run it. And looking back at where previous, it's not even the liquidity, is literally off the standard deviation, because when you get closer to all-time highs, we have less historical. So I'm working off the standard deviations for my exit targets. And that's off the dealing ranges. So I did not trade anymore the rest of the day, but that was the trade idea there. And it never did make all-time highs, and we see the macros around closing. Market on close macro here was definitely a sell macro. Dumped it right back down, and there's price now to end the week. So that's the good and the bad of today. And the business comes out. All these orders that are ridiculous. Let's go to the filled ones. Again, they're not showing my... Well, see, now they're showing NQ orders. Okay, so I guess it did show some. But it's definitely not all of them because I traded more than that. But we ended at 700 down. Take it as a moral victory. The only reason I traded in the afternoon too is because I was looking at the $2,000 loss, and I said, I really don't want to go into the weekend with a $2,000 loss. So mentally I feel better with a $700 loss. And the balance is still at 152, 430 and 10 cents. So that's where the combine sits now. Ugly day of trading, but it is what it is. Just documenting what I'm doing there. So hopefully that helps anyone that's listening after the fact. If anyone's hearing this, do not forget to live for today, because tomorrow is not promised. That is another big reason that there's a big gap in my trading from previous trades to today. It's not like I waited just because it was NFP week. Yes, I do trade less, but there was personal things going on, which is also what affected my mental thoughts today. So note to self, do not just walk away, close the computer, because until you build a discipline to not take the trades, Dan, you can't be in there. But yeah, I was just going to say, it was not great opportunities. I just wanted to end with that for my own self as I review this, and hopefully it helps you. As if your head's not in the right spot, just walk away. Don't even risk it. Even though I got back half my losers, it's because I do have some experience under my belt, and I'm just applying these newer concepts to me that I've been learning for a little over half a year, 8 months, whatever it is now. So things are starting to click. Things are getting better. But at the end of the day, it's not the chart, it's not the market. I have to be smart with myself, because the battle is with yourself and not with the market. Yes, the market matters. Yes, you need to know how to trade, but you also need to know yourself better. And I'm talking to myself here after the fact. So hopefully that helps anyone that's listening after the fact. And have a great weekend. Have fun. Enjoy family and friends, because as I mentioned already once, tomorrow is not promised for any of us. Live for today. Take care.